Is the crude oil controlling the stock market? Markets have fallen considerably in the past. Is it a sure sign to enter into a recession, or is it the beginning of a new start? Markets fear recession at one moment and jumps to boom in the next moment. Why do the markets turn volatile? Is the crude prices driving the market, or is the stock market driving the crude prices? Where do the bears hide when the bulls run, and what do the bulls fear when the bears wake up? Let us see in this video. Hi everyone, in this video we are going to see the fundamentals and the interesting correlation of the stock market, crude oil prices and the economy. Let's begin by first understanding the stock market. The inflow of the cash drives the stock market. As the money comes in, investors start feeling greedy about the returns and more investors join the club. And this in turn increases the stock prices. As the cash flow comes, companies start taking more projects and seek better earnings. With higher earnings, more investors join the party, and this is how a bull run starts. But let's pause for a second and look at how economy works. When a country or an economy is prosperous, people tend to buy more goods and consume more services, which in turn leads to higher demand and the companies turn profitable. With better profitability comes better earnings, and with better earnings, the investors are tempted to buy more, and hence the stock prices rise. So the equation of better earnings and higher stock prices remains intact for a while, but when the dynamics change, everything goes for a toss. There are several factors which can disrupt the relation between better earnings and better stock prices, but crude oil prices remain one important factor. And here is why. Although the world is trying to move towards renewable sources of energy, however, crude oil remains the most important source of energy which is sold in the international market, as most of the countries import oil due to the lack of reserves in their own country. As we know, when the fuel prices increase, it does not matter much whether you own car or not, but what matters the most is the price of the items that we all consume on daily basis. So with higher crude oil prices, there is an increased price of petrol, diesel, jet fuel, and all other byproducts of crude oil, and so the companies try to push the cost to the customer to balance their profits. Consumer is hit by the high prices and the demand is reduced. This creates inflation as prices keep on rising and demands reduce. Due to high crude oil prices in the year 2022, market fears recession, and as the inflation data shows, inflation is growing higher and higher, and it is natural for the investors to fear as earnings are expected to reduce. It is important to note a fact here that crude oil prices has not increased because of a permanent problem like the reserves getting dried up, but because of a geopolitical tension, and needless to say, as the time passes and peace is resumed, crude oil prices shall correct and stabilize to normal levels, indicating the higher prices of crude oil may not sustain. Additionally, the essential problem is market prices in whatever happens around the world on a daily basis, and hence market turns volatile and there is a cascading effect on the wages, consumption and the demand. Market enters into a vicious cycle and volatility continues until something major happens next. At this stage, market reacts to any positive or negative news and even rumors are qualified to be priced in. Once the price of the crude oil drops, the consumer demand will once again pick up. The ball starts rolling again and the earnings improve quarter on quarter with higher consumption. This has been historically proven during the recovery after the 2008 Great Recession. Thanks for watching the video and help us to remind you for more videos by subscribing to the channel.